So Dan, you're bringing the funny jokes, right? You got all the dad jokes.
I could drum something up if we get to a lull in the conversation. I'll jump in.
You
I
have
don't know if you
kids?
guys. Yeah, that's the segue here.
Okay. All right.
My
So
wife is the queen of dad jokes. Unfortunately, she's usually got about 6 or 10 queued up at any time if needed.
All right. If I get too boring, bring her in.
Yeah.
Did the
Yeah,
the
she's-
dads always get?
I don't
the
even know
first
how that
stick
started
on
with
the
her.
whole dad joke thing?
Well, I mean, the jokes aren't great, so I don't know how
it's
that
all in the-
started.
hey,
it's all in the
that's
witticism.
just mean.
Yeah,
That's high humor.
Well, we'll see what happens. I'm a few months away from having my first kid, so we'll see if I go the route of most dads and have just ridiculously cheesy jokes. See what happens.
When's your first kid due?
I think it's December 2nd now. We just had the first doctor's appointment 2 weeks ago and found out that we were actually like 2 weeks behind where we thought we were. So we were originally thinking the week of Thanksgiving, and now I think it's like December 2nd or something. So
all right, we
It's a
are
COVID
live.
baby.
Hello,
Welcome
world.
everyone to this week's weekly multifamily roundtable. This week's guest is Matt Sutika with Skylight Insurance. He's an award-winning entrepreneur and business owner in the multifamily and habitational insurance section. His current focus is Skylight Insurance, in which he was the founder and he's the CEO. Prior to opening up Skylight, Matt was the #1 ranked State Farm insurance agent, ranking first out of thousands. And he also invests in the early stages of startup, insurance technology, and entrepreneurial sectors. Matt, welcome to the show.
Hey, thanks for having me.
You bet. Beyond that amazing introduction, do you want to just tell us a little bit about yourself and what you do, what your company does?
Yeah, absolutely. Just basically, beyond that, we started out in the real estate. We started out small homes, fix and flips, rentals, little builder's risk. And I found that I really liked the people in the real estate, and then of course the multifamily space, whether it's lenders or, people are syndicating deals. So we decided a few years back to really concentrate on the apartments, or the multifamily, as you guys will most likely reference it. And so that's what we do. About 90% of our time is anything to do with apartments or builder's risk, fix and flips, anything on the rental space. That's really what we concentrate on. We went from starting in Illinois, and now we're in about 43 states. So that's our big thing. Anything I say building related, that's what we take care of.
So Matt, did I understand that bio correctly? You started Skylight. Is that accurate?
Yeah. Yep. I myself and a couple partners started it out of Chicago a few years back. I spent most of my early years with State Farm, doing what my dad did. My dad's owned a State Farm for 40 years, and uncles and all that stuff. So got into that, loved the space, but realized that I couldn't really get into the rental market and different things like that. So went over, started Skylight. I had brought my brothers over, and we kind of built it as a little bit of a family business, and it's grown from there. But we started.
That's
from
super
scratch.
cool. It sounds like you kind of have like a family business going there with your dad, and like a long history of that. But what's it look like to start an insurance company in particular? That's cool.
Yeah, this start from scratch is kind of, most people would think is kind of crazy. Nowadays, most people join something. They join a Goosehead, or they join a State Farm, or they join. So to go from scratch and build it out when you have to go get the carriers and get the markets and the licensing and all that stuff is kind of it's a long process, it's a tough process, but the reward of it long term is pay off. And on my family, the one thing I will mention is that yes, I have two brothers that have always worked with me, and I wish my parents would have had more kids because I could always more employees, right?
Yeah, they're either the best
it.
partners or the worst partners.
Depends on the day. It really does.
Yeah.
So how many?
It's tough at the
Oh,
holidays.
sorry. Go ahead.
If you had a tough meeting right before the holidays, I might not get a gift this year.
I was going to ask how many companies do you guys work with as far as insurance companies?
Insurance carriers across all the states. We're probably somewhere access to 70 to 90 carriers or more across everything that we do. If you bring in kind of the MGAs or the general agencies, it's probably over 100.
Nice.
Yeah, I mean, we have a core group of, probably in the 20s or 30s that are getting 70-80% of the deals, but we keep a wide plethora of contacts because there's always that deal that needs them,
Yeah. Now I work with, someone who has a business like yours, whether an insurance broker as opposed to, going to like a State Farm or something like that. But that's the big value add to me, from my perspective, is if you go to State Farm, like State Farm is your one option, right? I mean, they don't have other carriers they can connect you with. I've never gone through State Farm or anything like them before, but that's the main limiting factor I see is you go to someone like you and you've got, in any one state, probably like 30 different carriers that you can price shop around for people with, right?
Yeah, most people they look at that way, and it's 100% correct that you have more options. But the other thing that I realized going from the State Farm world, or the captive world as they call it, over, is that you have better relationships with underwriters on the independent side. So yeah, you have more options, but you also have a lot more negotiation power. You have a lot more. I can call somebody up at 8:00 at night and be like, "Hey, I just have to have you approve this for me," or "We got to get this under 70,000 for the client," or whatever it is. So it's the more carriers, but I find that it's a lot more entrepreneurial spirit on the independent side.
Yeah.
You can really wheel and deal a little bit more,
So it's almost like the difference between working with like US Bank and like a local community bank, right? You've got a relationship with someone and things are quicker and there's less red tape, basically, right?
Yeah, especially, with, a lot of these big apartment deals where you're going through Arbor or Bancorp or whatever, and they have a 1,000,001 requirements that you got to meet. And just sometimes there's, you get a property or two that just, they can hit 90% of them, but just like there's one or two things that are just like really hard to get. And that's where having those either multiple relationships to go to, or having that person where you're like, "Hey, you just got to cover this for me and I'll get you back on the next one. But, you're going to have to hit that ordinance and law target or whatever it is." So to me, that's what I like on this side compared to the captive or the one market.
I love it. Yeah, that's a huge value add for, I guess, people who are just, don't have that much experience investing might not think that much about it, from just getting their home insurance and car insurance. It's probably not really thought about that much. But when it comes to, investment properties like large multifamily buildings, really kind of zeroing in on those expense savings and being able to shop around to that many different insurance carriers is a huge value add.
Absolutely.
Matt,
I'm curious.
What are some things that you would say people miss when they're looking at insurance that you might bring up as a point that you would cover differently than somebody else?
To kind of answer that question a little is, I do the main thing that I do differently, I think, than probably most of the insurance brokers out there or whatever, is that I'm more of a partner on the deal, or at least that's how I like to perceive myself. And I'm more of an entrepreneur who happens to know insurance really well. And so I think that fits the main person syndicating the deal, but also helps that passive investor too, because when I'm looking at an OM that gets sent my way, right? Like I've ran a business, like I can look through and I can see those financials. And, I think a lot of things that the normal insurance person overlooks is they go right to how many units is it? What's the square footage? What's the make? And like they start quoting it, where I'm looking at, I go right to what was the, the T12 on the, for the insurance expenses. because, for one example, if I have a client that comes to me at the LOI stage, right? And, they're trying to get a bid and they're trying to be as aggressive as they can, and they're trying to get their numbers to make sense, and we see that, I don't know, it was 100,000 was the T12 on the insurance. One of my goals is always, can I get it 10 under the previous, right? Maybe I can, maybe I can't. But if I can, that allows that person to be more aggressive than, John down the street bidding on it, who probably has a range for the insurance. And then the other thing is when they're going to their investors and they're saying, hey, I want you to put money into this, right? It's almost like getting a discount on a stock, right? Or whatever. You're going into it saying, hey, look, this thing was already profitable, paying 100,000 for insurance. We can get it at 90. That's 10,000 divided by the cap rate, or however you guys figure out that increase in value, right? And you're instantly, providing. So I could go on and on about those type of things. With that, as an insurance person and kind of an entrepreneur, I'm looking at those items and how to help the investor or the syndicate or whatever take a look at the property instead of just insuring the risk. At the end of the day, of course, I'm going to hit the requirements, I'm going to insure it correctly, and I'm going to do my job, right? But that's not going to help you win a bid or make your investors happy, things like that. So that's kind of, I don't know if I hit your question correctly, but that's what kind of came to mind off that one.
So would you recommend an investor coming to you during that underwriting phase, before they've even sent in the LOI and they're trying to get competitive? Is that the point where they should be reaching out to you and having that conversation, or should they be waiting a little bit further down the road?
Yeah, I actually like that position. 99 other brokers will tell you no, because they don't want to waste their time with that, or they're not even sure if they're going to get the deal. I'd rather actually get it at that point to one, see what the numbers would be on it, get a head start on it for a couple reasons too. The other value adds at that point in the process is that you as an investor, syndicator, or whatever, you're still figuring out about that deal, right? Like what's going on with it. Has it had any losses? Has it had any problems with crime in the area? Is it, loss free, and is it Pleasantville, right? So also at that LOI standpoint, the reason why I like getting it then is I can also shed light a lot of times from one of my underwriters that says, hey, this property actually, we reviewed it, it's had no problems in the area. The crime rates are really low, or the opposite, right? And once again, that helps you, bid higher or lower, and the reason why I want you to come in at LOI and I want to help is I only make money is if my customers win their best and final and they get that property. So I don't want to wait until they've actually won it. Like I want to help them win it. And then of course they're going to let me help them with the insurance, right? So I just take a different approach to it. I would like to work with as many syndicators and investors to help them actually win properties. And then of course the insurance will ensue. So that's why I would like to get in early, and be part of the process compared to just hey, Matt, by the way, we won this. It's going to close in 60 days. Here's Bancorp. Can you get me a quote? That's more of a service than an actual partnership.
And how quickly are you able to turn around, in that LOI phase, if somebody comes to you and they're like, hey, we want to get this in as quickly as possible? How long does it usually take you to get that quote? I assume it's probably different if you're in a market for the first time versus if you're familiar with it, but
the high level is any state but Texas right now is probably 48 hours or less. Florida, if it's under 20 million in coverage, it's within an hour. I can get you an actual quote. Texas is right now about 2 to 5 days, or more. It's just a pretty tough state right now, but pretty much anywhere else that you go. And if you're under 20 million in coverage, we're getting you back something that same day. If it's over 20 million, you're probably pushing that 48 hours, but definitely something that can be done. And that's why I always ask, most people that reach out, my first question is when do you have to have this submitted by? When do you have to get your LOI in? And then I kind of use that. And what I do is I tell them, I'm like, hey, I'm going to get you the best number I can. If they send it to me Tuesday and they're submitting Friday, I'm going to say, hey, I'm going to give you the best number I can get by Friday. I'll keep working on it, but I'll do what I can by Friday, right? I might have 8 carriers, I might have 2, and we'll kind of figure it out together. But turnaround time's pretty quick, minus occasionally when a state gets into a little bit of tougher quoting. And right now Texas is a little bit tougher, but there's ways around that too to get Texas done.
Interesting. Oh shoot, what was I going to ask? Oh yeah, sorry. I'm guessing over the years you've had a number of investors and syndicators come to you after having had a pre-existing relationship with some other insurance resource. What's something you've seen over the years when you've taken on those new clients as far as reviewing the policies they've had in place, where either they have been overpaying for something through other carriers that they didn't need to be, or maybe they were exposed to more risk than they thought because they were missing something? Is there some things over the years that you've noticed other people lacking who are maybe working with someone who wasn't as well versed with working with syndicators and investors?
Yeah, absolutely. I mean, I think that's a fantastic question. There's actually kind of three parts to that. I've been actually doing a lot of this recently with COVID kind of going on. People have had more time or kind of looking at their current stuff compared to where I'm usually, swamped with new purchases, right? And the biggest thing I'm seeing, and let's just pretend that every broker is a great guy and a great girl and all that kind of stuff. But what I'm seeing is back to the lack of opportunities or lack of carriers. So a lot of ones that I'm getting sent just right off the bat, I'm seeing that they're out with like a surplus lines carrier. And the way you know a surplus lines carrier is if you ever see on the quote like the taxes and the stamping fees, and you're like, why the heck do I have like $8,000 in fees? That's a surplus lines carrier, right? They're kind of the secondary or last resort that you go to if you can't get it into what's called like a standard market. A standard market like is names you've heard of, like a Travelers, a Nationwide, a State Auto, a Seneca, Hartford, things like that are your standard markets. And so a lot of them, about a third of them, realistically, they either just didn't have those markets or they didn't have enough of them. And I'm able to just, lower the price and give better coverage by just strictly moving it from a surplus lines over to State Auto, and it's just a better policy and a better price. The other thing that I'm seeing is, yes, a lot of times, depending on the investor or what they're trying to accomplish, I do see a lot of overinflated replacement costs. That whether they did that based off of just getting a number from some tool they're using, or they didn't really ask the questions, or maybe the person purchasing it didn't really care, or maybe they hit the number for premium and they're good. But I do see a lot of that. So I spend a lot of times going back to the banks and seeing kind of what are you actually requiring the amounts and different things like that to be covered, and then kind of talking through things with the investors to see, hey, do we want to lower this, do we not? And then the third part of it is, let's just say we don't make any changes with the policy from a carrier standpoint. There's a lot of things that we can do deductible wise. There's programs that we can bring in, such as there's one called RLL that puts automatic, basically renter's insurance, if you will, to all your tenants, pass through the $8 a month cost to your tenants, but that will cover a lot of losses that are tenant related, which, as you guys probably know, tenants are the one leaving the faucets running and they're leaving the stove on and things like that. So you can mitigate risk, which means if you're mitigating risk, you can increase your deductibles, lower your costs, right? So I'm always saying that, I don't know your relationship from the man in the moon. It might be your brother-in-law, it might be your best buddy, it might be a guy you've used, but I do tend to 9 out of 10 when I get that chance, find one of those three approaches that will help somebody out and get them in a better spot.
Now, that automatic renter's insurance, is that something where you said the cost would just pass to the tenants effectively, and you would just do that by way of bumping up the rent $8 or something, so that way every unit is always insured and you don't have to count
Yes.
on the actual resident to actually sign up? Okay.
Yeah, I mean, that's huge. It's across the board, right? Your renters need it for their stuff. You're mitigating your own losses. And, as you guys all know, having claims on your record is just never good, right? Like, people ask me all the time, like, well, if I have this claim, is it going to increase my rates? And my answer is always this: I don't know until I know. And it's always better to be zero than $1. You know what I mean? It's always better not have it. And then, realistically, you're just also mitigating your risk. Like, forget the insurance aspect, for example. You guys have deductibles, right? And every time you have a loss, that's money out of the fund, right? That's money out of, that could be going back to a passive investor, that could be, upgrading the property, so even though a loss is covered, if you got to wind hail the loss and you got a $50,000 deductible because it's in Texas or Florida or something like that, that's still $50,000 out of pocket. Yeah, you're covered and insurance did what it said, but if we could work on mitigating things and it actually not cost the property owner anything or that investor anything, that's really what I'm about, is like, let's do things. And there's also, ways to have that increase numbers for your passive investors, because the $8 is a base amount. Some property owners will charge 10 or 12 or whatever as kind of installing it. You guys are probably familiar with this, where if you've ever maybe had like a cable company or an internet company, that you kind of just create this bundle package and every resident gets it and they pay $40 extra a month. It's very similar to that. You're providing something, it's automatic, and you also, allow your carriers to have subrogation that way too. When that's the reason for renter's insurance, right? Is so that if a tenant creates a loss, your carrier has someone to kind of go to first or go against. So just a lot of ways that you can increase, the value of your property, mitigate risk. And ultimately, when you have a broker who understands that, at renewal, guess exactly what I'm saying. These guys implemented RLL, they're lowering their loss. We can increase their deductibles. They had no losses. Their tenants are protected. So I don't want them to pay $100,000 next year. I want them to pay $90,000, right? And they're usually like, okay, that makes sense. Let's do it. You know what I mean? So it's constantly working on that picture of what your insurance is, but starting with why you're doing it. It's not just like, let's shop to get a lower rate. It's like, why are we doing all these things? And it's always about making the property more money, right? And, getting your investors paid back, or, paid more than just get paid back, et cetera, right? It's the why and not the what, if you will.
Very cool.
One of the theories that you hear a lot with insurance is that you really just want it for catastrophic failures. And so you're really trying to insure against those really fluke incidents. But as we're operating a business, it can be helpful to kind of find that middle ground, that balance point between, extreme risk coverage and then the likelihood of these more mundane things occurring. Do you have a way of helping guide people's mindset as they're looking at different policies and saying, this is what you should be balancing against this versus high premiums, low deductibles? Is there a way that you coach investors to look at that?
Yeah. I mean, I think, it kind of just spins off right what we were, just chatting on, is that, depending on how flush that complex is with cash and its funds or whatever, we might look at things differently, right? We might say, and I'm a big on go one way or another, just personally, thing is you're either hey, we can't even shell out 10K, type of thing, or, more than a couple times, then, it's hey, let's concentrate on keeping those deductibles lower. Or it's hey, maybe you own the owners, or you own your own construction company, or you own, or a company down the road that can fix things and update things real cheap. And then I'm all right, let's push up the deductible to, 25,000, right? And so those are the concepts, but it all comes back to numbers, and I just lay it out, right? So I say, hey, look, here's the odds. You're going to keep this property for 7 years on average, right? And the difference between a 10K deductible and a 25K deductible is, let's say, 10,000 in savings, so I can do easy math here for everybody and not get lost, right? So if we go 25,000, right, over the 10, we're going to save $70,000 in that time period, right? Okay. But, so I always ask them, I say, hey, so if I made you a deal over the next 7 years, right, I'm going to give you $70,000, and on average, you probably would only have one decent claim in that 7 years, hopefully anyways, right? So this is my example. I say, I'm going to give you 70 grand, right? But one time out of the blue, I'm going to call you up. It's going to be 3 a.m. in the morning. You're going to be sleeping. You're going to be really tired. The baby's going to be crying, et cetera, whatever, right? You got to I'm going to tell you, hey, you owe me 25K, right? You got to get it to me in about 60 days when things clear out, but I'm just going to surprise you with that, right? And so I kind of try to put it in, whatever you want to call it, layman's terms or just regular understanding of like, that's really what you're doing when you're playing with those deductibles. You're saying, is it better for this property to have $70,000 extra in it towards whatever, but run the risk that one time out of nowhere, we could have to come up with 25,000, right? Or do you want to, mitigate that? And really, I guess it would be a net of 15, right? Because you'd pay 10 either way. But that's those are the scenarios I'm talking to people a lot, is kind of like, let's look at the numbers and try to make this sense. If the savings only $1,000 a year, well, in that example, all day, let's take the 10 grand deductible, right? But what if it's $25,000 in savings, right? So I kind of do it based off the numbers and look at it over time period, or an investment period, or whatever the owner or the syndicator or whoever I'm talking to is wanting to kind of look at the asset.
Very cool. What how should I phrase this? So as someone's syndication business grows and they're getting more properties, and at what point during that business scaling process do you start to talk to clients about extra levels or extra layers of insurance, beyond just getting a policy on each property, to start to mitigate the risk of, the inevitable lawsuits from a slip and fall and like things like that? How do you have that conversation with investors as they're scaling up and growing?
Yeah, I mean, so I actually have that conversation pretty early on. I just think that an umbrella or excess policy, right, which is going to cover that larger liability, is so cheap in the grand scale of things, right? Your property and your GL might be 100 grand, for that coverage, and then you got a $25 million umbrella for $5 grand, right? So to me, and you can put multiple properties on that umbrella, right away, especially if as long as there's co-ownership, if you will, like, or common ownership. So for me, I'm starting off that usually on the very first deal and a lot of times it's a lender requirement for us to have 10 or 20 or 25 anyways, right? So most likely we're already in that discussion on that first deal. At least they're going to want 5. So I think that's something to just start off with early, get it maybe part of that first deal. But there's just no point messing around, I think, with the liability when you're in this space. It's just, you could work your butt off for 10, 20 years. It only takes one really bad lawsuit that could just literally undo all that work. Whether you split it up with partners or however you allocate the expense of it, I just think it's so inexpensive to have that coverage compared to everything else you're doing. So I get into that right away. As far as the umbrella, the other thing that kind of triggered my mind when you were mentioning that, as far as just people getting multiple properties, I think there's one myth that's kind of interesting out there. And this goes back a little bit to your other question from earlier of, what am I seeing when I'm looking at people's policies? I'm seeing this idea of, let's schedule everything. I got 30 properties. Let's put it all on one insurance schedule or whatever. It's kind of, I don't know if the term is, it's a thing of the old, or it's just a thing of like, people are scheduling things now without really understanding like the ins and outs of it. And so that's another thing that I am having conversations with people, but you need to really understand the schedule once you get into it, right? And I'll use an example. As we mentioned, Texas and Florida, right, are harder states to place business, right? Right now, Georgia, Memphis, Illinois, which is an example, are a lot easier to place business. Well, what happens is when you pick a schedule for your property, you're always having to go with the carrier that will take the worst risk, right? Because you have to get all of them, right? So what you're doing is, you're covering that Texas and Florida one, let's just say, but you're bringing these other ones that probably would have better rates, right, over to a program, right? So I meant to mention this earlier on thing, and it just kind of got me back to it, is that's another thing that I'm really looking for people, is that, if you have a schedule of all the same area, that makes a lot of sense. But when I'm seeing these investors who have properties from all different various states, I'm actually seeing where I can go in and we're actually kind of picking those apart. You know what I mean? We're finding better coverages, better pricing, things like that. So that'd be something that if you own multiple properties and you do have this schedule through Strata or, or Skinner or one of these big programs, you might want to have a broker kind of look through it and see, if some are better off on their own, or better separated. So I know that wasn't 100% your question, but I missed it from earlier and wanted to swing it on.
Oh, that's awesome.
Yeah, and just to clarify for people that aren't familiar with the scheduling, because it's a little bit new to me too, that's really just bundling all of the packages, all your properties under one single package. Is that the idea?
Yeah. So instead of having a property and general liability policy, for each location, you have one giant property policy, one giant general liability policy, and every time you would get a new apartment, what it's called endorse is the nerdy insurance word, but you endorse it on, or you add it to that policy, right? And usually, and it's supposed to, over the course of things, it's supposed to give you better rates because you have more premium there, and et cetera, et cetera. And I think overall, back maybe 5-10 years ago, I was seeing that a lot more. Now, the other thing too, it's naturally really easy for an insurance broker to do that, right? Like right now, you call me with 10 properties, I can throw those in an Excel sheet and have a schedule quoted up in no time. So it's kind of one of those, like, it's easy, but it's also kind of lazy, right? Mm-hmm. And so I think historically, these brokers kind of get in, they build these relationships with people, investors, whatever. They get a guy that's done 5-10 properties with them, and they just start scheduling because it's easy. Rick calls me, I just throw it on there, right? And Rick pays it. Rick doesn't thing. And so, and it was also used to be really hard to do individual apartments. You know what I mean? You used to have to do, we're not too far out of the pen and paper days, right? To a point. Mm-hmm. Now it's so fast and easy. You can quote these things online, and I have a carrier in Florida that literally, I can quote out an apartment up to 20 million in 5 minutes, 2 minutes, So I that's kind of my point about these schedules, is that, if you do have one, it might be time to have a look at it, see if it really is pound per pound still the best opportunity for you.
Mm-hmm. It makes a lot of sense. Like, you think that bundling would get you some better deals, maybe from a scaling perspective, and then also from an ease of access, because you just have that one policy. So it's interesting to hear that maybe not going that way can be advantageous too. So what would be those situations? Like, how would you know, oh, I should maybe be looking at the schedule versus breaking it apart? I guess that's kind of where guys like you come in.
Yeah, 100%. That's what we're doing. So how we do it at my office is we start with the schedule. So we'll send it out to our scheduled carriers. Let's just say someone sends me 4 apartments today, right? We send it out and I get my base rate, right? And I get the price per location. Okay. I pick my best ones of the schedule and I see it. Then I have someone in my office literally attack each one of those then individually, right? So let's just say on the schedule, it was 88, they were all 80,000, so I can do it easy. Then I'm like, hey, Joe, or hey, Zach, or whoever, that's my exact phrase, beat those, and so they'll go through and send each one out to 8, 9, 10, 11 individual, right? And they'll try to beat every single one. And then I might present to you, let's say out of those 4, I might say, hey, look, we're going to put these 2 on this program, but these other 2 were better. One was better with State Auto, one was better with Liberty Mutual. So we're going to keep those on their own, right? Collectively on your schedule, you would have been, by that math, 200, or what would it be, 320,000 or whatever, 80,000 a piece. By doing it, some on the schedule and some off on their own, we're actually at 280, right? So, and I always laugh. I'm like, hey, if it's worth 40,000 to have them all on a schedule, happy to do it, but this is a better option for you. And really, at the end of the day, for the customer, when we nicely just put it in an Excel sheet so they can see it, it really doesn't matter to the client as much. Is that going to be, all on one or whatever? Like I always say, hey, it's all with me. So you only have one phone number to memorize if something happens. But let's look at this pound for pound. Is kind of my phrase that we tend to use a lot.
I like that. That's your starting point. That's like serves as your baseline that you can then attack from. So I think that's interesting.
Yeah, I like that. I think we're so conditioned to just assume that, with all the consumer insurance products out there, it always is a better deal to bundle things typically, right? So I think everyone's just condition to like
well,
assume that that's going to be the case.
So I have a question for you.
Yeah.
Should a passive investor be concerned about the type of insurance and the coverage that an operator's putting on the asset, and what should the passive investor look for? Because like we were talking before we went on, that I don't think I've ever had a passive investor ask me about the type of insurance coverage that I'm putting on a deal. Yet it would seem like it'd be a pretty important question for the passive investor to know before, I place my capital with them.
Yeah, I mean, I think the passive investor should know a lot about the insurance. I mean, but not from as much from the protection standpoint and what I mean by that is, they need to know that their syndicator picked a good broker, and that good broker should make sure that it's insured correctly, and they're going to work with the lender, right? So to kind of just take that off the map, like we're going to make sure that the apartment is properly insured, right? Now, as an investor, if I put my Shark Tank hat on here for a second, and I'm all Mr. Wonderful here trying to get my my royalties back and my dollars back, is I'm going to ask questions like what, as we've talked about before, where's the deductible at? You know what I mean? What was the previous year's insurance cost? What was the seller paying for insurance? I'm going to concentrate on the insurance numbers piece to kind of get me a lot of data on, like I said, is there already value being added? We had one the other day that we moved from 140 down to 90, year over year, right? $50,000 difference, that as an investor, knowing that, like, I hope they shared that one, right? And that's $1 million in value, right? On a 50,000 savings. So those are the things that I would be looking at on the passive side is, what is that he or she doing differently for the project? Are they bringing any programs in, or are there programs in that we could increase rent, spend, or we could increase value of the tenants, but we're making money on, like the programs that I mentioned for the automatic rent, so those are things as an investor, personally, I would want to know, I'd be constantly as a passive investor, and I guess, this is with a grain of salt since we keep using the word passive, and I keep saying all these things that I would be like calling my syndicator up about, but I'd be looking, how does this thing make more money? How does it get more cash flow? At the end of the day, it's a business. And I do think that insurance is not the largest line item on there, but I think it is the one that you can do a lot with to add value to the property. So those are the things that I would want to learn more if I was a regular investor or passive investor, is how do I use insurance? Just like I'm sure there's other things that I don't know about in the deal to just, make this deal, better, make it, make it pay me back quicker, pay me, put me on the beach sooner, that kind of thing.
Mm-hmm. Yeah, you're mentioning a lot of passive investors probably aren't thinking about the insurance very much, and even on the active side, probably not super often, because like you mentioned, you maybe can't save a ton of money. In some instances, you probably definitely can, but I'm guessing a lot of investors have the perspective that insurance is kind of insurance, and that it kind of all is roughly equivalent. But from what you're talking about here, it sounds like if you have the right partner, somebody who really understands and can go into it from like an underwriting basis and saying, how can we maximize the returns here, that there can actually be quite a lot of benefits.
Yeah. I mean, also too, it's not a one-way street, right? So, and what I mean by that is that having a partnership is, yes, I make a commission on the deal, right? And the reason I bring that up is, since I preach partnership, hey, use me, bring me in on the deals, like I'm kind of part of that deal, right? So that, and what I mean by that is, if you think about the insurance and the broker, right, they can help you get a deal done, right? Like I've had guys call me up before and say, hey, Matt, and I don't even understand it sometimes, right? Because, I'm still learning, probably what you guys do and, what the syndicator is doing, but where they're like, I'm like, the insurance is 74,000 or 73,000. And they're like, I need it under 70. I just it's got to hit my numbers. I want the thing, whatever. And I'm like, you know what? Probably going to make 7,000 on this. I'll take out 4. Like, let's do it for 69,000 and let's get it done. Right. And that's not always the answer, but what I'm really getting at is when you look at your insurance broker, as a partner in the deal, right? At the end of the day, they're going to hopefully be on that deal for 7 years. They're going to make a good amount of money, right? Just like the lender, just like the tactical assets person, everybody's going to win on that deal, right? You can't have it be a one-way street. So I kind of like that aspect where I'll have my investors like call me and be like, Matt, how can you help me get this done? You know what I mean? Like, or they'll say, hey, can you really help me out on this one? And I'm going to be buying 3-4 more later this year. So, I can't emphasize enough that, if you treat somebody right, this is actually why I got into the multifamily space, because a lot of other industries, I was joking about with flow and, the bundle and different things like that, they treat the insurance person as like a commodity. They're like, yeah, send it to Sutika and send it to 18 other people and, whatever sticks, right? I found pound for pound that people in this industry, in the multifamily space, actually treat their insurance person a little bit more like a partner, which I, like to be in that role. And so when they do that, they're getting a lot more back than, the guy or gal who's going to buy an apartment and just goes to Google, finds 3 brokers and just like, hey guys, here you go. You're going to get some things. It might be rates. It might be a reduction in commission. It might be calling in a favor to the underwriter. It might be, doing a lot of other things. The other thing that gets overlooked a lot, and I don't know how you guys look at OMs or whatever, what's the star one? CoStar, whatever.
CoStar.
I don't know how you guys look at that and how you value it across the board, but me just kind of thinking off the hip on things is when I look at an OM and I value that insurance number, right? And that's the number that I know how to come up with, right? But what I'm really valuing is that real estate person or that broker who put that OM together, all the numbers, right? How factual is it? How honest is it? How accurate is it, right? And if we can say that this is kind of like setting that terms, if they put 80,000 for the insurance and I can say, hey, yeah, I can absolutely do 80,000 for the insurance. Naturally, I'm kind of like, all right, this whole sheet's probably pretty accurate, right? Like I can kind of get a better trust on the field. So the one thing that a lot of people overlook is, okay, yeah, the insurance number is great, but probably Rodney, was telling me earlier, he can probably guess the insurance rate at, 300 a door or what, whatever. But really, by me actually validating that number, I'm kind of validating maybe a lot of that OM or the person you're working with, which one, again, you can be more aggressive, you can trust the numbers. So there's a lot of things outside of, and you guys, a lot of my counterparts in insurance probably watch this and like, God, he hasn't talked about coverages and equipment breakdown and general liability and, property cover, whatever. Like that's the part I'm supposed to do. Right. And I think too many people spend all their time doing the thing that you're supposed to do and that we got time to do and not enough on these other things that insurance can impact.
Yeah, it's real estate is a relationship game. And just I think it was today or yesterday, we had a post on social media asking people, how do you reduce expenses? What are some of your favorite ways as an operator to reduce those expenses? And consistently, one of the things that came back was renegotiating your service contracts. And that really only occurs when you have good relationships with the people that you're in service with. And so overlooking the insurance broker as a key example in this instance is a big mistake, because then you don't have that relationship. You don't have the ability to go and have that conversation. Hey, Matt, we need this number to come down. It's killing us right now. Like you can't do that with a faceless organization.
Yeah. And it's also too, you think about it, like, I run a business. I'm sure you guys all, either running a business or been a part of the thing, or, that are watching this and everything like that. So you'll understand this is there's a big difference between telling somebody what to do and having it be their idea. Right. So if like I own one of these apartments or whatever, and I'm looking at things, I'm probably jumping on one of these Zoom calls with my insurance broker and maybe the lender for a refi. I don't know. And, maybe the tactical assets guy or this or that or whatever. And I'm just bringing up like, hey, we need to find ways to reduce costs at this property. Right. If I'm, as the insurance person, are instantly thinking like, can I do that? Because if I don't, they might go somewhere else or they might ask somebody, whatever. I'm volunteering that, right? And then it's like, it's my idea, right? So I think as a syndicator or passive investor or whoever you are in this deal, right, is think outside the box when you're looking at these things. You know, it's so easy to just be like, we got to reduce costs and then make calls like, hey, what can you do lower this year or whatever, instead of like bringing people in. You know, I've seen the best deals happen in your guys' space when it's like so much more collaborative than like handing out a to-do list, right?
Mhm.
Well, and that goes back to,
Yeah.
you know, the partner in the deal. I mean, you're
Yeah.
like what you were saying, if you're looking at your role as a partner in the deal rather than just simply an insurance salesman, that's where that relationship really pays off to, you know, to get the better price, to get the better coverage, to get whatever it is that you need to make the deal work to produce the best return for your investors.
Yeah, I mean, absolutely. I mean, everybody wants to be a partner. I mean, so bad that like actually, my hope is before the end of this year, I tell everybody this, but I know going forward is that, you know, like this space and the partnership and being part of it is, you know, I hope that what I do over the next 20 years is make a lot of money in insurance, but I want this money to eventually go back into deals. Like I'd like to eventually be the passive investor, or, you know, work with partners and say, hey, look, like I might make, 10 grand on this deal, you know, count me in for 5 or 10 or 25 or whatever on your next one or whatever. So I think there's a lot of that where if you just, you know, look at these things and the whole part of it, and everybody has their role, but you're all actually like asking and not just like telling or sending, I think you grow within, right? Like the best people that I've worked with in the multifamily space are the guys that seem like they're on every deal. And maybe they are in some capacity because they're constantly getting reached out to as like a thought leader or just for advice, or they're really good at running the numbers on it. And so I'm seeing them get brought into maybe some equity that they shouldn't have, type of thing, or they're getting this or that. And I'm just seeing this collaboration with some of the groups in this space. It's pretty phenomenal, you know what I mean? And I'm around a lot of different other sectors, you know, insurance, because my business can write all other different types of business aspects in my other departments. And the multifamily space, I think, is one of the best at collaboration and things like this, and in really working together compared to like siloed. And what we see in a lot of the other industries where it's like, this is my business and I don't talk to the other dentist down the road, you know, that kind of thing. So
Yeah, I've been pleasantly surprised with that aspect since getting into the real estate biz. And it seems to be consistent across the board that people in this industry don't have a scarcity mindset, or they all realize that there's more than enough deals to go around, and more than any one guy could do by himself. So people are really excited to help each other, I've noticed, as opposed to try to compete with one another, even though we're all effectively trying to do the same thing. And you'd think in most other industries we'd be competitors, like you said. Like, I don't talk to the other dentist down the street, but yeah, in this industry it's insane. Everybody that you would think would be competing with each other is actually just trying to help each other out, and it works very well. It always comes back to people. So
yeah, I mean, I see it, you know, because when we get down to those final emails, you know, like the 1 week before closing, and you finally realize like how many people are actually like working on this deal, right? You get that one email where you're copied with like 60 people, you know, and it really comes to light how many people on an individual deal, you know, have to execute and have to be part of it, and, you know, help to really get, you know, a 200 unit apartment done. You know what I mean? It's not just, one person. And I think if I was selling to a passive investor, I think, you know, or something on that, like, I think there's power in that too, right? Like if I'm investing my money right now, you know, for me, I like to put my money in the stocks that like of companies I use, right? Or that seem like they have more than like 1 or 2 people around the coffee pot in the morning, right? And I think that power to your investors of seeing all the people that syndicator brings in or whatever, it's like, hey, look, I got tax classic people, I got the lender, I got, you know, the lender's assistant, like it is you've already built that full company. Because I look at these apartments as companies and not purchasing an asset. Like that's a new business. So I think that for me, if I was giving my money into a deal, would kind of give me a good feel how things are going to go for the next 5, 7, 10 years. I don't know how long you guys are keeping these things before you're the ideal time to, you know, sell them off. But, I think there's little things like that people kind of sometimes don't look at.
It reminds me a lot of like a professional sports team. And I know Dan absolutely loves his sports, so he's not going to be able to follow
I
along in this
know-
analogy.
I
But
know everything about all sports.
yeah, but it's kind of like, you know, the general partners and people that are actively working on the deal, putting it together and executing it. Those are the players that you see on the court. But, you know, there's so many other support members on that team that never actually play. So like, you know, the physical therapist, the coach, the assistants, like people who are enabling the players to go out there to do what they do. Without that, the team doesn't get very far, because they can't focus, the players can't focus on the thing that they're really good at. And so you gotta look at the holistic approach of the entire team, of the insurance broker, and like who else is deep in the trenches there that's, you know, pulling some significant weight that you maybe don't see on prime time.
Yeah. And my biggest thing that I've seen too is be loyal in this industry, because, you know, from the time that I've been in it, that there's a lot of deals that go smooth. There's a lot of deals that have bumps, but there's going to be one deal or numerous deals where you're going to really need that lender. You're going to really need that insurance broker. You're going to really need that whoever, right? And that's when you're going to be really thankful that, you know, you built a good group of people, and that you were collaborative and you were working, because you're going to have to cash in that favor one day. I watch all these lawyer shows. So this is like really unique to me, because lawyers in these shows are always talking about like legit, like I joke around with my brother and say, hey, you owe me one, but like, I don't actually like ever like collect it. But, you know, in these shows, they're always like, you know, and I'll owe you one. And it's like a legit chip, right? That they like come back with, and like the thing. And I think that, you know, there's a lot of that currency within the multifamily space, where it's like, if you're building those partnerships and whatever, when you have that need, you know, you can go to that partner and they're going to get it done for you. You know, it's not the first deal they helped you with. And I think there's a lot of importance to that piece, not just the insurance guy, right? Like everybody, you know, create your Marvel team or whatever you're into, you know, sports team, you know, whatever, create that team, because the teams that are winning championships, like the Patriots and different things like that, because the Bulls, whatever. Yeah, you see it when they start handing out the rings. You're like, who the heck's that guy getting a ring, right? They're really quality all the way from their scout team on out, you know, which I think is an interesting aspect across the board.
Yeah, totally agree with that. We're reaching the top of the hour, and I got one question I really want to ask, because I think new investors probably are wondering this themselves, is what is the most common mistake, or the most common mistakes that you're seeing individuals coming into like insurance in making?
I think the biggest one I see from a new investor, insurance wise, is that they go out to too many brokers. You know, they heard somewhere, maybe it was, like I said, it was Flo or the Geico or something like that on TV that was talking about home insurance, you know, or, you know, go out to multiple people, get multiple bids. And they missed the concept on that, right? Is you should get multiple bids, but you should have one guy or girl doing that for you, right? And so what happens is, a lot of times you end up creating a problem for yourself. And here's why. Matt Sutika here has, you know, these three carriers, and one of you guys has three carriers, let's just say, right? And one of those is the same, right? And on that one that's the same, right, I have the really good relationship. That's the company that I just closed 10 deals with, right? So what happens is, this first person goes out to all three of those markets first, right? And it's the first in, first out system, FIFO, if you will, if you're an accountant on this call, right? Meaning that when I try to go to my three carriers, that third one that we have in common is going to say, hey, there's already a submission, I can't work with you, right? But I have a really good relationship with that carrier. That person's never worked with them really a lot at all, right? So what ends up happening is you're getting my B and C offer, right? They're not really actually getting the A offer because they don't have the best relationship there. And you end up getting, you know, kind of a B and C offer over here, if you kind of take that example. So what ends up happening is a lot of the best quotes out there are getting wasted. You know, I get a call almost weekly from a carrier that's like, hey, like we would actually be really, really good on this one. You might want to consider getting a BOR done or whatever. So that's a pretty common mistake that I see for new investors, that they think that like, hey, I want to get my best deal. I'm just going to call Larry, Samantha, and John, and I'm just going to, blast the market, on things. And then, from just a thing in general is not being open and honest at what you want to accomplish, right? So, and what I mean by that is I'll use the home and auto example, and then I'll relate it over, right? One of you guys calls me today and says, hey, I want you to take care of my home and auto for me, right? You guys have an agenda in your head, right? It might be that you're paying $2,000 a year for those, and you'd really like to get down to $1,500, right? But what a lot of people will make the mistake is I'll say, oh, how much are you currently paying? They'll be like, no, I don't want to tell you that, or, blah, blah, blah. Just see what you can do, right? And you can already see where that just doesn't help me get to your goal, right? So the same thing that I'm seeing a lot of times when I'm working one of these apartment deals, whether it's up at a renewal or it's a new purchase, things like that, is when I call that person, like, let's talk about what you want to accomplish. Matt, I want a better carrier. Matt, I'd like to get this down $5,000. Matt, I want this, I need that, right? Because the more you can load up me with those arrows in my quiver or whatever thing, the more I can get it done for you, right? Otherwise, what happens if I don't, I might come back with a thing and you're like, oh, that's too high. And I'm like, okay, well, what are we trying to get to, right? And it just wastes a lot of time, effort on both sides. So, at the end of the day, you want me to accomplish something for you, right? And I'm never going to not get you the absolute best rate. Like some people have this weird conception that if they say, get me 70 and I find 60, that I'm going to like move it up or something.
Mm-hmm.
It just doesn't happen, at least for me. But so that would be my two things is don't go out to, 3-4 brokers, go out to the one. If he or she isn't getting it done, then maybe go out to a second one and then don't use that person on another deal because they didn't get it done. And then just be honest what you're trying to accomplish. Hey, Matt, right now, I'd like to see if you could get me a quote around 40,000 for this, or I'd really like to, get a better carrier or a lower deductible or whatever the scenario is. It's just tell that insurance broker exactly, what you need them to do. Don't just shoot them an OM and say, hey, good luck.
I love both of those examples. The first one, because I wouldn't have really thought about that, but it makes a lot of sense once you kind of explain how the system works. But the second one, I really enjoy because Dan and I, we talk a lot about starting with the end in mind and understanding what's your end objective and then working backwards from there and setting incremental goals and steps to get you to that location. And it's the same with your teammates and the insurance broker in this instance. Like they need to know what that ultimate destination is. Otherwise, they don't know if they need to be packing for, beach weather or if we're going to the winter home to go snowboarding, right? And so there's maybe certain people, certain team members that you don't want to have be like completely upfront exactly about what your goal is. Maybe like when you're going into a broker relationship on a deal, like maybe don't share with them your absolute rock bottom price. But the insurance broker isn't going to be one of those combative relationships at the end of the day.
Yeah, I mean, it's just like, if the two of you guys are partnering on a deal, and you're going into it, it'd be wild if all of a sudden you got on the phone tonight and you're like, one of you asked each other like something about the bid, right? Like, hey, we got to get a bid in. And you responded to that person, well, just send me over what you think it should be, type deal, right? It's like, you'd be like, okay, that makes no sense. Why are we just not talking about what we should need to get it to, or whatever? And it's that same type of thing. It's like, and it goes back to, and what I'll wrap up with is, if you're treating everybody on the team, including the insurance person, like a partner, you'll have those conversations because they're part of the deal. If you treat them like, or, this lender, this goes across the board, commoditized based, or just like, hey, I'm going to use this person once, then you're probably going to be like, hey, do this and have at it. And you're probably just not going to get pound for pound the best result.
Love it.
Yeah, that was a ton of value. So guys, do we have any follow-up questions, anything lingering in the back of your noodles that you want to get answered now? We got a couple people in the chat. So if you guys have questions, throw them in there now. Otherwise, we're going to be wrapping up here in just a couple minutes.
I have a quick one. How many, do you have a pretty big client base in Minnesota? Because you're in Florida, right?
So I'm in Florida right now. Our headquarters is actually in Chicago. We do write in Minnesota. It's not our largest state. Our largest states, of course, are like kind of the Southeast hotbed, right? A lot in the Tennessees, the Georgias, the North Carolina, Florida, Texas, things like that. But we have a lot in Illinois due to that's where our headquarters and where we were founded. But we do write in Minnesota, and we can. I think we're pretty much in every state besides the states that I like just never been to, like, you know, I think we're pretty much in everything besides like maybe like Montana or like Idaho, you know, and maybe we'll get a deal out there, but yeah, pretty much all the carriers that I mentioned, everything like that, we'll have in every state at a 80-90% clip. And then every state has their own, what I call like, what it called, like local carriers, if you will. So, you know, you kind of combine. So you go into a state, they'll have 10 carriers, 7 are your national carriers that are in every state. And then you'll have the word I was looking for is regional. You'll have, 2-3 regional carriers that are competitive in that area.
Okay, very cool. I like it.
Yeah, you got to get out to Idaho. Idaho is beautiful. And Boise is an up and coming little city there. So there's a lot of business to be had.
Hey, there you go. I would like that. I have not been out to Idaho, been out to a lot of places out west, but I'll have to check it out. We were actually pre-COVID, we were supposed to actually, I think right now, be in Salt Lake, which would have
that'd have been good.
But yeah, everything as we know postponed and moved on and everything like that. So but yeah, no.
Do you have insurance for pandemics? Can we get this? Could I be covered for this next year? Or
yeah, so can I put an asterisk on this video of like, this is just Matt here?
You got a pre-existing condition here, Dan. Sorry.
This is like a crazy topic, but right now, you know, viruses are excluded, you know, on policies, but I would assume with the different lawsuits that I'm hearing going on and different things like that, you know, I have clients call me and they're like, why didn't you think that I should have got covered for this? I was like, are you kidding me? Like, I don't think anybody knew COVID was coming. Like,
we all saw this coming. Right?
Yeah.
Like, you know what I mean? Like, yeah, I thought this, you know, we were going to have this happen, but I think you'll see a lot of changes where there's endorsements and different things like that that'll be more available. There is some programs I have through this real estate carrier that you can do that relate to that are kind of COVID related that can protect you about like skip rent. So there's some coverages for that where if someone's like goes on a tenant goes on like military leave or just skips rent or is evicted, things like that, you can get like a month's worth of their rent paid. So there's programs like that that you can get in and establish that are relatively inexpensive, that because really that's what you're protecting, right? This virus is that you're protecting your rent, your income, right? So there is some programs like that if you want, I can share with you that are that I'm seeing a lot of people kind of start to think about now where they wouldn't before, because most of the time before, everything that would occur on a property that insurance related that would cause you to, you know, not have that income coming in, usually there's a covered loss. So, you know, this whole item is, you know, causing people to have different thought, you know, different.
So the interruption in business, like if you have, let's say you have a fire and you have an interruption business where you would lose income based on the fire. You're saying that viruses currently are excluded from that type of claim. Yeah.
So I tried not to be nerdy too much on this call, but I'm gonna nerd you guys out for like 10 seconds here, is that yes. So it has to be a covered loss or a peril that has to happen to ensue that business interruption or that, or your rental income coverage to kick in, right? So on your fire example, fire is a covered loss, right? So therefore, the resulting damage of the fire is tenants no longer paying the rent because they can't live there for 8 months while it's going. You have that business interruption coverage kicks in, right? these viruses on, like I said, I'm gonna asterisk this with saying, because I don't know who's all watching this across the country, and I don't know every carrier, but pound for pound or 9 out of 10 are having that as an excluded. So it's not a covered peril, right? Or it's excluded on the policy. It's saying a loss due to a virus, or how the exact wording is not a covered loss. So therefore, when that happens, it's not a covered loss. So there is no resulting business interruption.
And is that a relatively new thing within the last 5 years or so? Did it used to be written into the policies, or has it never been covered?
It's really always been excluded. It's always been in with like the bacteria and the mold and the fungus and, the virus, all these things that we used to think of as just like maintenance issues, like I would say, people would call me up and say, well, why isn't fungus or mold covered? And I'd be like, well, that's more of a maintenance. I really don't think that insurance carriers, anybody, you and I, everybody really thought about this whole COVID thing. Like, we haven't had anything to this extreme where something has shut us down like this. So I think it was just, all the viruses that were out there were so like itsy bitsy that it made sense to just have it as an excluded thing. Because the reason why they exclude things on a policy, right, good, better, otherwise, is to keep pricing down for the average person. They want to build a policy based off of what is 99 of 100 people want, right? So the more you add in, the more prices are up. So they start to exclude things, right? And then that fancy endorsement word I used earlier, you can probably on some of these policies have paid possibly an endorsement for viruses or for mold or whatever, depending on the carrier. But there, I'm not trying to defend the masses, but there's really no broker out there in insurance that was probably having these conversations, about it. If they were having it probably more about mold and fungus and things like that. Potentially, I live near the southern sides of Chicago, where some of those things grow like grass. And, so you might be having more of those type of conversations than you were ever thinking about like a pandemic or things. So it's unfortunately, it's one of those things that it's just I don't even know, I'm lost words. It's unfortunate, and the caveat is, because I've had a lot of conversations, a lot of angry clients calling in and, and talking about this, is that I say, the thing with it is it's fortunate and it's unfortunate, right? Because, if every policy, if that was covered right now on every policy, right? A lot of people wouldn't get paid anyways, right? Because every policy in America, right? It'd be like the stimulus. Every policy would have a loss right now, right? Every single person, right? More people would not pay rent. Everybody would file a claim. And I think a lot of carriers outside of the very big ones would go bankrupt. They just wouldn't physically be able to handle it. So it's really one of those things that you chalk up into this whole COVID thing that just, it sucks. And they're really, like I said, I even tell people, I'm not saying that it should be covered or shouldn't, but if it was, I don't know what situation that would put the insurance in general. It would be bailouts, it would be potentially go down to a big five. I mean, it could be a lot of different things. Maybe you're not even getting paid out anyways because the company just, calls bankrupt. There, that would be a lot of, you think about every policy in America would have a claim. That would be pretty wild. So yeah. It's a weird subject. It really is. But I do think that it will become an emphasis now, especially, depending on what you read and what articles and all that stuff, there's these things where, COVID's not going away, and, in some aspects probably, right, until there's a cure and whatever. So I do think carriers will, regardless if COVID ever gets this bad again or not, they won't get caught without this opportunity again to at least offer it as an endorsement and take premium for it. But unfortunately, just like anything else, sometimes these scenarios create coverages or create changes for the industry. And I think that's what you'll see with this going forward. I think you'll see a lot of people advertising for it and talking about it.
Yeah. Very interesting.
I'm impressed that we made it over an hour before we ever talked about COVID, guys.
Yeah. Well, like I wrote on LinkedIn, I purposely avoided talking about it because everybody else was talking about it.
I couldn't resist. I had to get it.
You got to get in there. Yes.
Yeah.
Yeah, no, it is true. Yeah, depending who you talk to, it's like all they can talk about, or you get the person like, like right, who just is just over it, just like doesn't want to talk about it, just thing. I actually went and got my the antibody test today, which was pretty interesting on things. We wanted to go check. We have my one brother, he's doing okay, but he's got cancer right now, and he's going to go through a surgery.
Sorry about that.
Oh yeah. But the reason I bring that up is our whole family needed to get tested because we wanted to know, we got to be careful. We are more careful than the average thing or whatever. So yeah, it was interesting. We like literally pulled into this doctor's office and rolled the window down. The nurse came out in full garb, poked the finger, checked for it. Results in like 15 minutes. We were both negative, meaning we haven't had it or never had it, type deal. But that was my COVID story for the day for you guys.
It's a good one.
So you hit
a great COVID story,
Yeah, exactly. So you hit Orlando right when this whole thing started. So you probably haven't had the opportunity to figure out if there's a really good place to eat down there.
Yeah, no, yes and no. So we are, my fiance is a Disney fanatic. So we are in Orlando quite a bit, but always Disney. So if you're talking about restaurants outside of Disney, in her eyes, those don't exist. So I wouldn't, but yeah, we got down here early. We were down here March like 15th, because Chicago was one of the first cities to really start to shut down right after like New York and the East Coast, and then, San Francisco. So we were on lockdown since like March 9th or 10th. We did that for about a week, and we just knew that it was going to be that way for, I don't know, 3-4 months or more. I mean, Chicago's still pretty shut down. So my parents live about an hour north of Orlando. We knew the lady that lived next to them, rent out her house and is never there. So we did the 16-hour drive down. We brought down the computers, the monitors, the stuff, and we just rented the house next door. And we've been kind of just sheltering here, which was the best decision we ever made, because we live in a condo in Chicago. And I don't know how it is where you guys are around, but it was feeling like I watched that show Chernobyl, and that's really what it felt like, because it was cold and dark, and just everyone had this almost like, for a long time there, people kind of had this like hatred. It was weird, like, because it was so like you can't be around people, that like it was almost like when you see people on the street, like people were just like, so it just
they like freak out and like, back up. It's like, dude, chill.
That's the biggest thing that I'm tired of is double arm's length away kind of thing. Everybody's so afraid to.
It's tough. Everybody's kind of handling it different, but yeah, we need to gather. We don't have really outdoor space there because it's right in the city. So we couldn't really like just get some fresh air. We couldn't it's a condo. So it was the best decision ever, because if we would have probably stayed there, I probably would no longer have a fiance, because I know I would have drove her nuts. At least here she can like get away from me and go out on the little deck and porch and put her ear in, and like things like this right now where she's probably wanting to, hang on. I'm making her sit over there in like dead silence, because I'm like, do not make a word of noise while I'm on this, That's actually my favorite thing about COVID is all the Zoom video scenarios where you see like kids running in and all the thing. I don't know if you guys have seen those like videos of like the funny stuff that's happened, where like the little kid was like on with his school with like the camera, and his mom's like getting ready, and he like walks in and she's like completely, in the suit. And it's like, Mom, how do I get this camera off? Like, so
it's hilarious.
Just things like that I think are really, really interesting.
Yeah, you got to make the best of the scenario, and it sounds like you guys are doing that. And kudos to your fiance. I had no idea she was in the room with you. She stayed very quiet. So
she was on. She actually, so she runs PR for Ernst & Young, and so when we were first getting going here, she could start to tell that people are starting to get on, and Roddy and I were like talking about, what we're going to talk about on this or whatever. And she slips me this little piece of paper that reads, FYI, participants on webcast can see this prep, so
yep.
Just keeping an eye on me.
We've kind of just accepted that.
Yeah. You got to keep it clean.
Yeah. So she's good. She got here. She made sure that, I had the right height on my laptop and whatever, because she's doing this stuff. What's kind of crazy for COVID is Ernst & Young just did some just massive commercials on CNBC, which is really cool. So she's been doing this exact thing for all of their big leaders. So she is like getting on with them on like a Zoom, and she's having them sit in place, and she's telling them like, hey, that book's inappropriate behind you, or like, you can't have, this picture here or whatever. And they've been actually doing these multi-million-dollar commercials all from home, all through this, that have been airing. It's been kind of interesting and cool to see. All
That's
that
cool.
Yeah.
It's really been a good exercise in the resourcefulness of people.
Yeah.
So, I mean, there's a silver lining to everything.
Absolutely.
Yep. So Matt, before we wrap up in this, where can people reach you? Where can they find you? Everybody will say their website. Really, my favorite thing is, to go is text me, call me, 312-877-2692. You can email me, Matthew, 2 T's at Skylight, like in your roof of your house, insurance.com. You can go to skylightinsurance.com, the website, but, just like all three of you guys on the phone call, if you guys are doing a deal tomorrow, you're probably texting or calling. So, the deal. So that's my favorite way, is to shoot me a text and say, hey, Matt, got a new deal. It's this address, can you start working on it? I'm going to respond, yeah, shoot me over the OM. And then we get going on it. But of course you can email me. Of course you can go to the website and do all that kind of stuff. But
all your contact information on LinkedIn, Matt?
Yeah, it's all on LinkedIn, all under Matthew Sutika. I'm tagged all over this post. So you click on there, you'll see all my contact info. You can message me. I think Facebook Messenger and LinkedIn Messenger seem to be more of a medium nowadays too. But I love that back and forth, like, let's get the deal done type of communication more than, formal emails and all that kind of stuff. So yeah, just cool. Most of my people that work with me more than once are shooting me some type of text, and it's usually like 3 words. It's like new deal, 3200 Lorraine Street in Jacksonville. I had a guy last night that sent me 3 in Jacksonville, and I think in about 8 words, and I was like, okay, cool. Send me the 3 the OMs. He sent it to me, and then that's how we do it. Like, I like that interaction a lot better than having to do a lot of crap.
Yeah, Matt's on several deals with our group, and I can tell you that he's very responsive, and he's been able to really hone our insurance costs so that we can add more to that NOI, which is a good thing.
Mm-hmm.
That's the name of the game.
Yeah,
absolutely.
I like it.
Awesome. Well, this has been great, Matt. Really appreciate your time. I'm going to put all that contact information in the description on YouTube once it goes live there, and we'll hopefully get you connected with a couple people here. And
yeah, that would be great. And hope to continue to connect with you guys. And
absolutely,
one day I'll see you in 3D life.
That's the hope. That's the hope.
Yeah.